Now, as China outlines its economic direction for the next 5 years, Australian investors are worried about a hard landing in the country. Credit ratings agency Fitch Ratings says a China downturn is seen as the biggest risk over the next year. That's according to Australian bond investors. That's replaced a housing market downturn in Australia as the biggest risk seen by investors. Rival ratings agency Moody's says record high household debt in Australia is raising the risk of more people defaulting on their mortgages. Moody's found that housing affordability has fallen across the country, especially in Brisbane and Melbourne over the past year. Now, for more on what Australian bond investors are worried about, I'm joined by Managing Director at Fitch Ratings, John Miles. Thank you so much for joining us. So why are Australian bond investors so worried about China?
So in our latest survey, we found 42% of bond investors rate a hard landing in China as a high risk. Now, we've conducted 8 surveys to date with Kanga News, and in the first 5 of those surveys, China ranked as the top risk. In the last 2, it was replaced by a domestic housing market downturn as the main concern, but it's returned to the top of the list in this latest survey. Now, I think there are probably 2 factors at play here. The first is the Chinese economy is going through a process of rebalancing. And as part of that rebalancing, the authorities have to manage growth in debt levels as well as economic growth. Now, the latest reading for economic growth came in at 6.9%, and that exceeded most people's expectations. But what you've seen at the same time is that leverage has continued to increase. And I think it's that final point, that leverage has continued to increase, that's most worrying bond investors. There's possibly one other point at play here as well, and that's geopolitical risk. So we've seen tensions escalate on the Korean Peninsula, and that may also be playing into the minds of Australian fixed income investors.
Now, they're also worried about a housing downturn, as you said, not as worried as before, but that is still weighing on the minds of Australian bond investors. Why is that?
Well, we've seen a rapid ramp up in house prices over recent years. And when Australia's trade ties are so strong to China, if you're to have a hard landing in China, that could impact negatively on domestic economic conditions. And that makes the Australian household more vulnerable due to the higher levels of leverage that they're carrying. Now, in the survey, one of the interesting findings here was that investors were more pessimistic over a 12-month period. So 42% of investors expected house prices to decline, while only 14% expected them to rise. But we also asked that same question over a 3-year horizon, and investors were actually more optimistic over a 3-year horizon, and so 37% expected prices to rise, and an equal number also expected prices to decline, but a definite shift towards a higher level of optimism on house prices.
But if we look in the shorter term, are they expecting some sort of house price crash?
No, not a house price crash. There's the expectation is for prices to moderate up to about 10%. So in terms of an impact on the economy, we're not expecting that to be a major impact. If you look at some of the other economic indicators that we surveyed, unemployment, 80% of investors expect the unemployment rate to remain below 6% over the next 12 months. So unemployment is a very important factor in housing defaults, and that level of confidence in unemployment suggests that house price declines won't have an impact on defaults. The other economic indicator we looked at was interest rates. Not one investor expects interest rates will decline over the next 12 months. So obviously upward momentum in interest rates also suggests a level of optimism.
But they are worried about the impact on Australian banks if home prices fall.
Yeah, to a certain extent. I suppose there's 2 factors that you need to consider from the perspective of the banks, is that prices can fall without defaults rising. But secondly, Australian banks are reliant on offshore markets, and they're reliant on the confidence of offshore investors. So we wouldn't necessarily need to see a major crash in the housing market before investors may become a little spooked, I suppose, in Australian banks, and therefore that could have a little bit of an impact on their funding plans.
Okay, John Miles from Fitch Ratings, thank you so much for joining us today.
Thank you.